Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin, I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, the past 12 to 18 months have seen a flurry of funding come the way of fintechs. We've also seen the rise of the Special Purpose Acquisition Company, or SPAC. Banking and investment platform MoneyLion has benefited from both these trends, going public earlier this year. The company's founder and CEO is Dees Choubey, who joins me now. Great to see you, Dee.
Nice to meet you. Thank you for having me.
You're not a bank, but you seem to do pretty much everything that the so-called neobanks do. So maybe you can just tell us more about MoneyLion and exactly what the company does.
Sure. So MoneyLion is a financial technology platform. We started the business in 2013 on the heels of the last credit crisis, when here, at least in the United States, a lot of the money center banks were on their heels. And really what they were trying to do was placate the U.S. Treasury, which had all of a sudden become a stakeholder in their capital structures. So a lot of the innovation that used to happen inside of the money center banks all of a sudden was yielded to financial technology companies. And of course, Silicon Valley, Apple, Google, Twitter, all of a sudden had a say in how consumer financial products were going to be built. So we saw an incredible opportunity in 2013 when we started to use artificial intelligence, machine learning, and a platform approach to use some of these open beachheads to go build financial products and take them directly to American consumers without having to go through a branch network. So, we partner today with a bank. We are our own broker dealer. We're our own registered investment advisor here in the United States. And the elegance is one piece of technology that puts the customer at the center and builds a digital banking capability, a wallet, if you will, payments capabilities, peer-to-peer, instant funding, as well as a investment account, crypto trading, rewards. And more importantly, a lot of folks can build these individual accounts, but one of the things that MoneyLion does well, and one of our superpowers, is the ability to give the American consumer advice on what to do with the next dollar that comes in into their bank account.
Okay, and is that perhaps something that differentiates you from the likes of Stash or Acorns or others in the investment space?
Yeah, look, I would say if you take a step back, right, in the 2010s, we saw the proliferation of fintechs because consumers demanded a cheaper, faster, better product. And if you go back to 2010 to 2013, it was really fintech 1.0, at least in this innings, right, where we were building monoline products. There was an insurance product, there was a lending product, and those started to differentiate into more specific products, like lending products for home loans, or lending product for construction, lending products for medical repairs. Over the 2010s, what we saw was once these platforms got to a certain level of scale, they started to think about adding the second product or the third product. So what we have done is, instead of really thinking about it from a monoline transaction perspective, we've actually looked at it from the other way, where we've said, okay, what does the consumer want to accomplish? What are the life goals that they want to, at the end of the day, use the financial product for? So we build these avatars that are spanning times of excess and times of need. And that ability, having seen 40 million Americans come through our systems, does indeed differentiate us in not necessarily the financial products that we're building, but more in the philosophy of what we're trying to accomplish by way of outcomes for the American consumer. So there's, in the open economy, a lot of people can build a debit card program. A lot of folks can build, stock trading through, Drive Wealth or Apex or others, right? And a lot of folks can do the same with credit products. But where we shine, and the reason why we're seeing, escape velocity in terms of users coming onto our platform, is because we're contextualizing those financial products, on how to use it, on showing the consumers through content or through education or through people like you or the power of the community, when to use a credit product and how to use it, when to invest in crypto, when not to invest in crypto, how to think about goals-based investing, and bringing it into one holistic conversation with the consumer.
Okay. Now, in September, you went public via a reverse merger with a SPAC. The stock perhaps hasn't done exactly what you would have liked since then. Do you get a sense that investors are perhaps, you just kind of got caught up in people getting a bit tired of SPACs, or some companies that went public with SPACs, which perhaps didn't turn out to be exactly what investors had hoped for?
Yeah, so looking again, if you kind of take a more of a macro view, the SPAC product is imperfect. I used to be an investment banker at Goldman Sachs in the 2000s, where the SPAC product was seldom used, and then kind of grew in popularity, and it became a real asset class in the capital markets at the beginning of the year. So as we saw incredible product market fit and demand for our products in 2020 through the pandemic, when again the money center banks were on the sidelines of creating or delivering products for American consumers, we saw that instead of staying in the capital in sort of the private markets and raising a Series D or a Series E, that a SPAC transaction actually created a lot of efficiencies as well. So that was the vantage point earlier in the year. We had an oversubscribed pipe. So a private placement, a SPAC, as you know, it's a merger. Oftentimes, you also do a private placement to make sure that you have certainty of funds coming in by way of the transaction, and it's also effectively an IPO. So we've been on a 7-month education process with public market investors about why we think most of MoneyLion's value creation will be in the public markets. There's some technical dynamics. We believe we're in a technical vortex right now in terms of just how. Whether there's a playbook or whether there's strategies that have been built in terms of how you play some of these de-SPACs. But needless to say, we have earnings next week. We've got an incredibly robust product roadmap. So we believe that with consistent execution, we have the best team in American fintech. We're going to, the stock's going to do what it needs to do in the long run. And in the meantime, we're continuing to build what we believe is a pretty powerful financial technology platform.
Okay. Now, I'm glad you mentioned it. You came from investment banking. I mean, you were born in India. You came to the US, I think, when you were just 4. I read that your father was a software engineer, and seems that he was kind of keen for you to follow suit, but things didn't quite work out that way because you went into finance.
Yeah, look, I mean, I think it's the sort of the ethic from that part of the world is, really math, science, technology heavy. So I always had a fascination with how things were put together. It'd be weird to say that as a teenager, always was really, kind of intrigued by how M&A worked. So when I was at the University of Chicago, I just, I remember my father kind of forced me to take computer science classes, which I wasn't particularly good at. I think the way that I started my career was really understanding how these deal dynamics worked. So if you fast forward, a lot of the things that we've done at MoneyLion, we've taken some of the learnings, from from what I did as an investment banker, was effectively see how these products are built, how they're delivered, how they're financed. And now kind of taking the company through sort of the latest machinations. It's putting it all together. But at the end of the day, we couldn't have done it with some of the best technologists in the world, right? And technology is moving at a breakneck speed here. We've got a 220-person team in Kuala Lumpur, Malaysia. That's, it's the top fintech or analytics or engineering job in the region now to come work for MoneyLion in our Kuala Lumpur office. So it's all, there's lots of interdependencies, interconnectivities in terms of how life works out. But really, we've seen that play, very nicely over the last 20 years or so.
And as we said, you worked in banking and finance with stints at Citi, Citadel, Goldman Sachs, and Barclays. Was it easy to kind of leave what presumably was, a pretty decently paid job to kind of go it alone and found your own company?
Yeah, look, it was certainly not easy, and there was a lot of naivete behind it as well. I started MoneyLion when I was 32, and if we had known the vantage, if I had known everything in terms of how hard it is to build a financial institution, whether it's the people, whether it's the technology, whether it's compliance, regulatory, dealing with regulators, without that naivete, it's hard to do it. But what we did know though was it was a moment in time. The banks were indeed on the sidelines. And that vantage point I got from, advising some of the biggest banks in the world on CCAR or, how they were thinking about acquisitions. That was the big trend that was the impetus for going alone and, convincing folks to, kind of coalesce around this mission of creating financial access.
Right, so maybe for future entrepreneurs, blissful ignorance is a positive if you want to found a company because you just
100%.
don't know how hard it's going to be. But look, Dee, don't go away because we're going to take a very quick break, after which we're going to continue our conversation with MoneyLion founder and CEO, Choubey. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Dees, so I've got a few more questions for you, more kind of general questions about the kind of investment and fintech ecosystem. We talked earlier about SPACs and what was going on. We've seen other fintechs going public, like Hippo, which have also, let's say, not turned out quite how they perhaps would have liked, up until now at least. Do you think that more fintechs will be opting to stay private or go down the traditional IPO route from here on in, or do you think SPACs have still got some life in them yet?
Yeah, so look, I think the SPAC market, and we lived through it, and it took us about 7 months. It's an imperfect product, right? We've been saying that pretty consistently, and it needs to be used pretty judiciously, right? So the idea that there are 200 plus SPACs on file with the SEC, what that's done is it's created a backlog, and that backlog creates uncertainty. And that's, sort of what we experienced, is that because we had so much uncertainty created over the summer in terms of timing of when the de-SPAC would happen, what we're seeing now is re-educating and going on roadshows again to re-educate the buy side on sort of the incredible momentum our company has. So I think as folks look at accessing the public markets in the future, absolutely, it'll have to be on a case-by-case basis. It depends on the type of sponsor that you have. Does the sponsor have relationships with the buy side? Do they have conviction in how they would help in the de-SPAC process? So absolutely, it's a great product for some folks, but it needs to be used judiciously, and it can't be, the facts and circumstances need to really match for it to be a useful product.
So always read the label. So look, we recently saw the launch of the first approved Bitcoin ETF in the US. Of course, in Europe, I think there are quite a number of ETPs or exchange-traded products that have, whether it's Bitcoin or Ethereum or other cryptos in them. Is this the end game for crypto going mainstream, or is it just the beginning?
Yeah, look, I think it's just the beginning. You have a bunch of layer 2 protocols emerging that they're going to create different applications. You've seen the emergence of NFTs, which are very popular, at least. So MoneyLion, our user base are the 90 million Americans that self-identify struggling with finances. It's a middle income part of our society here. It's about 40,000 to 150,000 USD of household earnings every year. That segment, about 77% of them have still not ever touched a crypto product, right? So that's where we think there's a real opportunity. And we launched Bitcoin trading and Ethereum trading in October fully to our entire user base. And what we're seeing incredible adoption of is roundups, right? So people are enabling, okay, I'll use MoneyLion's digital bank account. Every time I swipe my MasterCard, I can now round up cents, dollars, multiple dollars into these asset classes. So whether it's the price is 63,000 or 50,000, the consumer is dollar cost averaging in microtransactions in ways that probably they would, that's the right way to invest. So you're sort of playing the entire volatility, and that's how I think that proliferation of the asset class is going to increase at some point. MasterCard announced this, that they'll enable through their network acceptance of crypto. So we're already seeing the tea leaves here that that's the precursor of more commerce being done through crypto, more crypto native wallets, and real use cases in the real world with Web 3.0 programming protocols as well.
Right, and interestingly, talking about crypto, I read a wonderful line about how Robinhood got 40% of its cryptocurrency transaction revenue in the third quarter from Dogecoin, with Matt Levine, the columnist, quipping that that's a $30 billion public company that gets 8% of its revenue from its Dogecoin division. Are you seeing similar things?
So we don't offer Doge today, but we do.
Sounds like you're missing out on a big revenue generator there.
Yeah, look, I think we have to be a little careful with how we position sort of the altcoins because from just a cultural and kind of philosophical perspective, first we want to educate the user, and we want to make sure that the coins have deep liquidity as well, right? So we're going to be very thoughtful with how we add coins, and there's a whole process to it as a public company as well. But that said, that doesn't surprise me. I think there's lots of, what Americans want is they want yield products. They want to know how they can live better lives, right? And sometimes these financial instruments or these financial products are just manifestations of sort of the aspirations and desires of what people want to do in their lives. And I think that's what you're seeing through whether it's meme stocks or whether it's certain speculative crypto assets. That doesn't obviate the fact that there are protocols that have real intrinsic value, real store of value, and ultimately could be used for not only advancing the innovation of sort of the technology, but actually having real world use cases behind them.
And if they've got a picture of a Japanese dog on them, then so much the better, it seems. All right, well, look, amazingly, we've run out of time already, but that was a really interesting conversation. I really appreciate your taking the time. So thank you, MoneyLion founder and CEO, Dee Choubey, for joining me today.
Enjoyed it. Thanks for having me.
And I'll be back again next week with another big name from the world of finance and technology. We do hope you will all join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Programme via www.parisfintechforum.com. Hope to see you next time. Bye-bye.